David Burrows is our guest from Barometer. He was also on the program on the 18th of August of last year. Sir, your top picks are up a combined 14%. We're looking at Gibson Energy as the big standout winner here, up more than 36%. If you, as an investor, are up 36%, do you take a little bit off the table, or do you just keep riding it higher?
I have to tell you, we continue to buy this stock. We are big believers in the long-term secular theme in energy infrastructure. In fact, we'll talk about another one today in top picks. This is probably the second biggest sector exposure that we have across all of our client portfolios. We think that the sector has the likelihood of 8 to 12% dividend growth over the next 5 years because of the very strong volume growth in North American oil and gas production, specifically oil. Gibson specifically has lots of opportunity to expand their business. So low cost of capital on one side in this environment, on the other side an ability to grow their volumes without a lot of risk involved.
And as a midstream company, they are not as exposed to the fluctuations in energy prices, although they would be to a degree.
That's absolutely right. And when we look at the energy space right now, in the producers, you've got cost problems, you've got environmental problems, you've got lots of different issues that you have to deal with, and you have to deal with world price for oil. And, that can be very positive. But at the same time, you could say, well, I'm going to participate in that volume growth simply by transporting it or storing it or processing it, which is what the midstream energy infrastructure companies do. And in this environment, it's a low volatility way to get a return on your capital.
And not only do you think the 4.5% dividend, the 25-cent distribution is safe, you think they'll grow it?
We think that they will grow it steadily over the next 5 years.
Okay, now as far as the stock price appreciation goes, it's at $22 today. Street consensus is there might be as much as 10% more upside in the next 12 months. Do you agree?
I agree, and there's many people who would say pipelines and midstream energy is expensive relative to history, but over the last 20 years you haven't had the kind of volume growth that we're seeing out over the next 5 years. So we think you get your yield plus you get a multiple expansion because of that future optionality.
Top pick number 2, tied into our conversation earlier about Starbucks, it's McDonald's. This is the one that is only up 5.5% by comparison, and that includes the 3% dividend.
Yeah, we came out of that at $97. We had a very, very good pass in the stock. And of course, it's been backing off a little bit since then. And I'd like to go back to the group at some point, either Yum Brands or McDonald's, if we see some kind of basing out. But in the near term, probably not the place to be now.
Does the 3 months on that chart that we looked at there suggest to you that there is some basing? Because I've been told, the longer the base, the better the case for a rise.
Yeah, and McDonald's had a very good run. It's one of those companies that did see an earnings multiple expansion over a number of years. And when you get that, and then you have a deceleration in the numbers, oftentimes the market resettles and you have to see a multiple compression before things get going again. So I think not quite time yet.
Okay. What about the timeline for something like that?
I think it's really going to depend on the consumer. At this point, we're seeing dialing back of consumer spending expectations, so I'd be just a little cautious there.
All right. Top pick number 3 is cash. It's also a top pick for this round, so what we're going to do is we're going to set that aside, and we'll get to that towards the end of the program. You're going to want to stay with us. It's David Burrows from Barometer Capital Management, North American Large Caps. That's the focus, and I've got a line available at 1-855-326-6266. When we come back, Facebook, it's taken a beating since the IPO. Is it time to hit the like button? We'll find out.